When I analyze what's happening in our local market, it's amazing how it parallels to what's happening in the national real estate market, although less extreme. Because we've been talking about what's happening in the Florida market, in the Arizona, in the Denver market. Months of inventory are increasing exponentially. Prices are going down. Days on market are increasing. We are seeing some of those factors. The biggest change we're seeing that's not happening nationally in our market is inventory is actually going down. Inventory is going down because of a couple factors. Number one, across the board, there's less homes going on the market. Why are less homes going on the market? Interest rates, in my opinion, are one of the biggest driving factors. They continue to stay in the high 6s, even 7, which is demotivating sellers to get their home on the market because where are they going to move to? Are they willing to trade their 2.5%, 3% interest rate for a new home? Many cases are not. Also, sellers are saying that prices are stagnant, or in many cases they're coming down. So are they prepared to put their home on the market and get less than their neighbor did 6 months ago? I don't think so. So we're seeing this reduction in inventory, and it is not reduction in inventory as a result of increase in sales, because when we look at unit sales across the board, unit sales in the 4 markets we follow, St. Louis County, St. Charles County, St. Louis City, and Jefferson County, all those markets have June over June unit sales that are down. St. Louis County, down 4.6% June over June. St. Charles County, down 3% unit sales. St. Louis City, down 4.5%. Jeffco, down 2.4%. Now, it's interesting to note, because we continue to always refer back to 2020 was a year that nationally 7.5 million homes sold in the United States. Last year, this year, we're going to see about 4 million homes sell in the United States. So again, very consistent when I compare June of 2025 to June of 2020 for the 4 markets we follow. St. Louis County, unit sales June of 25 versus June of 20, down 23%. St. Charles County, down 35%. St. Louis City, down 21%. Jefferson County, down 32%. So again, consistency across the board where there's just lower unit sales happening right now. New listings, again, we talked about the fact that new listings are down with the exception of 1 market we track, St. Charles County. And St. Charles County are increasing. It's June over June, they're up 8%. It can be attributed to the number one thing is the amount of new construction happening where those homes are just not selling. We are starting to see some of the builders putting out spec homes that they thought would have been sold in pre-build or actually during the process, but they're completed homes that are going on the market. And there are some great, great opportunities to purchase those homes. Those spec homes that the builders want to get rid of. So there's some great opportunities. Overall, I want to reiterate though, yes, we're seeing inventory go down. We're seeing sales units go down, but great homes are selling multiple offers, over asking, and in many cases, just there's some huge, huge numbers happening, but those are homes that are really exceptional, prepared for sale. A home that's overpriced right now, taking 1, 2, 3 price adjustments, may not even get the deal done. So you have to be, if you're a seller right now, you have to pay attention to what's happening in the market over the last 30, 60 days. You can't go back to what your neighbor sold 6 months ago last year. It's just not the same market as it was 6, 9 months ago. The only other thing that we're seeing right now, and we've talked about, part of what's bringing down the inventory level is expired and canceled listings. Many sellers that just are at the bottom of where they can sell are just deciding to take their home off the market. They're either going to stay put or they're going to rent that home. So, interesting market. Interest rates are driving a lot of this, the economic conditions. Now, again, those are uncontrollables, but those are having an impact on the market. Something we're going to have to pay attention to over the next 6 months. And every indicator is that interest rates really aren't going to change from, they may float within the sixes, but we don't really see them going in the fives or other. And they may stay right around the high sixes, 7. So if you're a buyer right now, there are some opportunities. There's opportunities to buy contingent. There's opportunities to have inspections, appraisals that just 6-9 months ago, when there was tight inventory and everything was selling, contingencies weren't really able to be put in place on these homes. But now they are. So there's some great opportunities for buyers. And if you're a seller, you got to price it right. You got to prepare it for sale, and you got to have it marketed to the highest level. You also have to move quickly. If indeed the market's not responding to your current price condition, you got to move quickly to get it realigned. Because as we've talked about, in a downward moving market of prices, if you're overpriced, the only way to catch the market is to take a price adjustment. Remember, upward moving market, if you're priced a little high, eventually the market will catch you, but not in a downward moving market, where again, we've seen prices come down a tad when you're looking at year over year, but still, they are significantly up when you look at June 25 over June 20. So it's really a market of 2-3 tails. It's inconsistent. It's some market you really have to pay attention to closely. If you have any questions about buying, selling, investing, let us know.